Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, to wrap up the week, it would seem the Australian dollar has turned back to a bearish sentiment after we've seen many challenges at this 60-day moving average, and the market is still failing to overcome the challenge to the bullish case, that is. And with the market turning away again for the third time upon this challenge, sets up the move for another challenge at 71.60, which is seen as a short-term base. It is assessed from there further weakness may emerge due to the RSI being beneath the midway point, and the MACD is still somewhat weak and therefore could look towards 70.90 as a potential target. But my broader target, which I haven't mentioned for some time, still holds probably around 68 cents. But that's the broader target. But in the interim, I still feel the downside challenge, first of all, has to get through that 71.60 and then down to 70.90, with any upside challenges continuing to fail around that 72.35-55 area. The euro, well, there's a bit of question here on this trend line, which comes in around 112.70 to around 113, the figure. In light of the pattern, it is negative, and I feel further risk is to the downside. And if we can take out this level somewhere around 112.70, then we should see further risk to the downside and look to the broader target of 111, figure 50. Next week, all eyes turn to the US Federal Reserve rate decision, and the market is preparing for at least pricing in a potential rate hike in March. Nevertheless, the pattern for the euro is still closing out the week to a negative bias. The dollar yen has continued after a very whipsaw price action to a bear case and now reaches its objective of 113.65 after stabbing there. I do expect to see profit taking coming from this region because we did see a strong rebound with this dragonfly doji. Still, if the market fails to show any kind of support 113.60-70, then we could be looking close to 113 as a potential target, as the RSI and MACD is still married to a bear case. The sterling, well, the market was a little bit whippy overnight and again rejects the topside challenge and still on track for this week, the challenge in 135.35 and reassess from this support line. I do anticipate the bulls will step in and take the challenge from there and look back towards that top side of the range around 137.5 in the broader sense. Let's see how the level of 135.35 holds or buckles. CADJPY still remains negative and still holding its course to the downside, somewhere around the low 90 region or maybe around 89.60. In light of this pattern, the rounding top is forming somewhat a bearish case with the technicals and therefore should eventually see a further slide. The upside challenge on gold, well, it was a bit questionable whether or not we've broken it. Market hasn't closed above 1,842 as of yet, and this is now into the third consecutive day, but still try and attempt to take the challenge higher. I'm wary that the bull trap is holding in place and therefore could be triggered and eventually see the market drop down towards the lower side, which I feel eventually will be at 1,800, figure 6. Well, after the second attempt to refresh its 7-year highs, oil has dropped and fallen beneath the 85 challenge and now actually posting beneath there of around 84 to now 82, but 82.5, but it's recovered. In light of this pattern, keep an eye on this RSI because I feel the market may be holding towards a down challenge around 80 as a potential target due to the 2 rejections from those 7-year highs and profit taking now coming into play. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start of the day and to the great start to the new weekend.